Hello and welcome back to How to Master Your Mortgage. I'm Christopher, Mortgage and Protection Advisor, and I've been inspired to make this particular video through a variety of customers who have said to me they want to make their mortgage term as long as possible so it makes their monthly payments as cheap as possible. And my reply to that is, okay, if there's a genuine need to reduce your monthly payments, that's fine. But I want you to truly understand how much extra in the long term that it will cost you in terms of extra interest. So I'm dedicating this video to them, and I'm going to compare a 25 and a 35-year term. All the figures that I've calculated in this video I've used via a search engine calculator. So in this example I've used my search engine. Other search engines are also available. Just simply input mortgage calculator into that, and then it generates this calculation table. So I've put in this example, you're borrowing £100,000. The mortgage term is 25 years. And for the first example, I'm going to use 3%. So an average of 3% over the 25 years, the total cost of your mortgage is £142,263. Meaning you're paying back the capital of 100,000 that you borrowed originally, plus you're paying in interest £42,263. It means your monthly payments are £474. So we're going to carry forward this information into a future page, and again you can use this technique to make your own calculations as well. So to recap, we're comparing a 25-year term versus a 35-year term. As I said, I've had quite a few customers saying we'd like to have our mortgage over as long a term as possible to make it as cheap as possible. So this is not about affordability. Their focus is on cheapness, and I want to make clear the actual cost of that cheapness. So it comes down to the true cost. Their question is, can I have the mortgage term as long as possible in order to have as low monthly payments as possible? Reminds me many years ago of when people were taking out interest-only mortgages, when that was allowed, to make the monthly payments really cheap, and then found they had many problems down the road, some of whom are mortgage prisoners now, because they can't remortgage onto a capital and interest mortgage to actually pay off the capital itself, not just the interest, and they're subject to the standard variable rate of the lender in question. So this example is based on borrowing £100,000 at an average interest rate of 3% over the term, whether it's 25 years or 35 years. And this is the calculation. So if you're borrowing £100,000 over 25 years, you're paying monthly for the mortgage, that is both capital and interest, £474 per month, per calendar month. And the total interest you'll pay is £42,263 on top of the repayment of the original loan or capital of £100,000. Whereas if you extend the term to 35 years, you're paying per month £385. So you're saving £89 per month, so to speak. But, and this is the big but, your total interest that you pay over the term of the mortgage is £61,637. So on balance, that's extra. We're just shy of £20,000 in interest payments for extending the mortgage term an extra 10 years from 25 to 35 years in order to save £89 per month in mortgage payments. If you can't generally afford the extra £89, then that's one good reason why you might take the 35-year term. But if you can afford it, my question to you is it worth the saving? And so to reiterate, that's an extra £19,374 in interest payments in order to save £89 per month in mortgage payments. And that's just based on average interest rate of 3%, which historically isn't normal. So historically, the Bank of England long-term average of interest rates for the past 350 years is 5%. And in fact, I'll be featuring another video which has a very clear graph which you will find very useful. And if we actually take that figure of 5%, the difference in extra interest payments between a 25-year term and a 35-year term increases to just over £36,000. So that's almost doubling basically. And finally, as always, your home may be repossessed if you do not keep up repayments on your mortgage. Thanks for listening.